Hello everyone and welcome to my weekly update with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, this is a jam-packed week of economic data, of central banks and of key political decisions, and it will be, I think, a fairly volatile week as a result. Markets are fairly consolidating coming into this week, but there's a little slight air of dollar correction coming through as of Friday, due to the fact that we are sort of now pushing towards Donald Trump's decision on who is going to be the next Fed chair. This is going to be one of the major factors for the markets, I think, this week. And the announcement is expected to come before Friday when he flies off to Asia, and it's probably going to be on Thursday due to the fact that we've got the Fed meeting on Tuesday and Wednesday. So we could have a decision this week, and it could mean that Jerome Powell, or Jay Powell, becomes the next Fed chair. That's what the sort of chatter is at the moment. That's why Treasury yields have started to come back a bit, and that could be a fairly sort of continuity candidate for the markets to take hold. But I think this the decision, either whether it's Jay Powell or John Taylor, will be fairly key near term for the dollar. We've also got the Republicans who are set to lay out their tax reform bill on Wednesday. How that comes through and how that is sort of perceived could be also another key sort of driver of volatility in the markets. But not only that, we've got a whole load of economic data. We've got PMIs across the board. We've got the core PCE, which is the Fed's preferred inflation data, and we've also got non-farm payrolls. But in addition to that, we've also got a load of central bank decisions from the Bank of Japan. We've got the Fed, and also what's likely to be an historic rate hike from the Bank of England. So lots to drive markets throughout this week, and lots of volatility possibly as a result. Now, in terms of your Forex markets, what we've seen is a big breakdown on the euro dollar. That has come on the back of the ECB decision to dovishly taper its asset purchase program down to 30 billion euros a month. Now, that has certainly sort of driven the euro dollar lower. Bund yields fell away, and subsequently we saw euro dollar breaking through a key long-term or medium to long-term support at 1660. That was a big level that had acted as a floor. That has now broken. That changes the outlook on euro dollar in the coming months. I think if we continue to see dollar strength, there's nothing to really suggest that the euro is not going to be dropping back to 113, maybe 114 in the coming weeks and months. Now, in terms of cable, it's fairly sort of choppy at the moment. It's sort of ranging between sort of $1.30.25, $1.33.35 on a medium, near to medium term basis. So many different factors throw cable around on a daily basis. We've got anything the Brexit related gets jumped upon by the markets. Not only that, you've got sort of dollar related factors such as tax reform and also the Fed chair at play as well. So all these key data points. We've got a Bank of England rate hike this week. Seems to be priced in, according to the market, having sort of already accounted for probably 25 basis points of hike in the short sterling interest rate swaps. But certainly the outlook for the Bank of England minutes and the quarterly inflation report will have a key factor, I think, in terms of whether it's going to be perceived as a dovish hike or not. So lots going to be driving cable around this week. Now, dollar yen has got not only the Fed but also the Bank of Japan. Nothing really expected from either bank this week in terms of surprises, but certainly there is the element of sort of rolling over at the moment on this dollar yen. As I said, as the Fed chair issue has sort of moving towards Jerome Powell in the last sort of day or so. But key support 113.25 near term. If that tops out, that's 100 pips of downside, but then that drags you back towards sort of 111, 112 area, which is supportive for the dollar yen. So equity markets, we're still in the midst of earnings season. Earnings season is improving, certainly picked up last week. The blended earnings growth went from around 1.7% to 4.7% from last week. So a fairly decent set of numbers through earnings last week. That helped to drive certainly the S&P 500 on Friday up to new all-time highs. The technicals are not so convincing though. There's a little bit of a suggestion that momentum indicators are sort of rolling over a touch, so watch out for that on the S&P 500. In terms of the DAX, It was massively dragged higher from the ECB decision, the dovish taper that weakened the euro. That is all sort of adds up to strength for the DAX, but also it's now broken out to all-time highs again. So 13.095 is the key breakout support now on the DAX. In terms of FTSE 100, it remains a laggard. It's so disappointing in terms of performance, underperformer on a perennial basis, and it certainly remains that way. It's sort of even dragging back towards the sort of 7,450 key support on a near-term, medium-term basis, but yeah, it's a real disappointment as FTSE 100 rolls over once again. In terms of commodity markets, well, the stronger dollar is a worry for the gold traders, and what we're seeing is the likelihood is that if tax reform comes through and we get some sort of continued dollar strength coming through that with yields pushing out strongly higher, we're likely to see the gold price coming under further pressure. So gold is actually coming back towards a key level of support, 1250 to 1260 this week. That's a long-term support throughout medium-term support on a price basis, but also a trend line support on a longer-term basis as well. So key levels near to medium-term now on gold. Will it break down below 1250? If it does, it opens 1200 again. So that is gold. We're looking at oil as well. Oil's been breaking out to new highs, or new two-year highs, certainly on the Brent crude. The WTI contracts are sort of looking at the sort of earlier 2017 resistance levels, so key levels being tested as the market pushes higher on suggestions that Saudi are going to sort of push for further OPEC cuts, and that is certainly helping to underpin the support for oil at the moment. So in terms of the data releases throughout this week, as I said, PMIs all over the place. You've got three major central banks reporting. You've got non-farm payrolls on Friday. What is average earnings going to do? Is it going to pull back? 2.7% is the expectation on the year-on-year. Non-farm payrolls, how do you read this payrolls report? With the incredibly low or negative payrolls growth we saw last time, minus 33, it's now expected to be 315,000 positive. So how do you sort of weigh up the relative benefits of the sort of the 2-month basis of that? So the earnings growth is likely to be a key factor once again on that payrolls report. So with that in mind, I wish you good luck in your trading throughout this week. Lots going on, lots of volatility, lots to move the market. So I wish you good luck, and I'll speak to you next time. Thank you.